All right, guys, bang, bang. I've got Michael here. We've been hanging out for a little bit, so we figured we probably should turn the microphones on and start actually recording. Thank you for so much for coming to do this. We got tons to talk about, and frankly, I want to learn about ETFs.
I'm super excited to be here. I mean, the last 45 minutes, we've covered so much. So I can't wait to get into the real meat of it all. So
we pretty much already recorded the podcast, so you guys missed out. But all right, let's start with your background and kind of how you got to ETFs, and then we can get into exactly what's going on there.
Okay, so I guess at this point I'm kind of known as the ETF nerd. I gave some little trinkets out earlier, but how did we get there? My background, I actually grew up in North Carolina.
Oh, so did I. Where in North Carolina?
Charlotte.
Okay.
I did spend some time in Chapel Hill. I know you guys have that presence there. I went to NC State, actually.
Ah, very cool. I was a Duke fan.
Yeah, triangle, something's happening there.
Every friend I had was a Carolina fan or a State fan, and they all thought I was weird for being a Duke fan.
When I was a kid, I was pretty good at chess and debate, and that paid for me to go to school, and I studied philosophy and religion. Certainly didn't ever think I would be in this industry.
Really? Wait, how do you get to school on chess and debate?
They give scholarships.
Really?
Yeah.
For chess or debate? Or both?
I got the primary money for debate.
Yeah.
But they still wanted me playing on the chess team. However, there was this thing called girls, and and the chess didn't work as well. But it's nice because, chess translates into a lot of other things.
Yeah.
So.
Well, hold on. I want to talk about debate for a second because to me, it was always like they were trying to teach people how to argue. And it seemed like the people who were just good at arguing to begin with, like, had this natural inclination. But the education of how to argue or debate didn't really seep in like high school, et cetera. Did you have a different experience actually going through it?
No, you're 100% right. It was really process.
Mm-hmm.
We said we'd go some rabbit holes here, so here's one. My proudest moment in debate was I was at Berkeley for a tournament, and I got the first ever tie.
What is that?
So
does that work?
Nobody ever thought there could be a tie.
Yeah.
Right? And I was losing bad, and the argument they were making against me was a critique of my language, that the way I was going about trying to win this debate was oppressing them, right? And I was like, well, then there can't be a winner, and I won a tie.
So how do they determine who the winner is? Like,
there's a judge.
There's a single judge.
Well, in the final rounds, there's usually 3 judges.
Okay.
But in the, usually you do like 6 rounds and then you're in the finals. But that's my crowning achievement, the first ever tie.
That's pretty good.
Yeah.
Well, maybe it'd be better to win, but a tie.
Well, I was definitely losing, so I'll go for the tie.
Got it. All right. So you go to school, chess, debate, etc. What do you do after school?
So my grandmother passes away and my grandfather's left up here alone. And I think before I figure out what I'm going to do with my life, let me go to New York and take care of my grandfather for a summer. And I had this friend from my childhood who was there, and he was driving a Lexus. And, the Joey Tribbiani kind of stereotype, that was this guy. And I'm like, what do you do? He goes, I work on the stock exchange. I go, what do you do there? He goes, I don't know. I wish I was kidding. I'm not going to say his name because he's a good human, but
and he was just like a classic New Yorker, slick back hair, gold chain, everything I'm envisioning right now.
Everything.
Whipping the Lexus, working on the stock exchange floor, probably slamming donuts in the morning, the whole 9 yards.
Right at 1999-ish.
Yeah.
1999, 2000.
Money falling from the sky, bonuses are inflated. Yep.
I mean, and he didn't know what he did. I know what he did.
What did he actually do?
He was a clerk for Susquehanna or Bear Hunter. I don't think it exists anymore, but it became Goldman or something.
And so what do the clerks do?
Nothing anymore. They barely exist. I mean, that's all been digitized. But when I saw that, I said, I'm going to write a book about how horrible Wall Street is and all these terrible things. I'm like, philosophy, religion, this is my chance to tell the world how terrible this is.
Fuck capitalism.
Fuck them all, right? But here's where the story turns, right? So then I make 2 or 3 phone calls. I get an internship. My grandmother buys me the worst sport coat I could ever imagine. Mm-hmm. The other grandmother, not the one that passed away. And my grandfather gives me a pair of like alligator shoes. They were the most uncomfortable freaking things I've ever seen. And
Did you look good though?
No. I looked I looked like a 22-year-old lost kid who did not belong there.
Who was a philosophy and religion major who's about to fuck up Wall Street.
Yes. Yes. Who's going to write this amazing critique. I knew nothing.
Okay.
So I get there and immediately actually fall in love with it. It was like a meritocracy, right? It really wasn't all these high-powered brains just trying to scam the system. It was a lot of like blue-collar workers down there on the floor making what is now being done by computers, right? Like, but I fell in love with it. 3 months into it, First Union offers me a job as a broker. Spent a year and a half learning what not to do. And then I landed at a hedge fund mutual fund shop called Horizon Kinetics.
All right. Before we get to Horizon, what did you learn not to do?
Oh, so when most of the broker trading programs, like if you've seen the movie Boiler Room or Wolf of Wall Street, all those, I hate to say it, everybody thinks it's an exaggeration. It's actually much worse. I mean,
it was worse than that.
Yeah.
In what way?
The part of Wall Street where they're doing the selling is a horrible part of Wall Street.
Yeah.
Right? Those cold calls, those get the client in, churn them, all that sort of stuff. Doesn't matter how big the bank is. At least 20 years ago, it still existed that way.
Yeah.
I can't say it does today because I don't do it anymore. I never did it. I didn't succeed there.
I've had people come in and say basically their job was when they joined one of these brokerage, they walked in the morning, 8:30 right before the market opens, and the whole goal of the day was 800 dials.
Yeah.
Let's go.
Yeah, and
just
so
smile and dial, and let them keep going. And you just heard no, click, no answer, no, click, no answer. And then somebody wanted to talk to you, and it was just reel them in to get them to buy a stock.
100% yes.
That's fucking crazy.
So you'll appreciate the North Carolina connection. I'm working at First Union in New York. Nobody in New York knows what First Union is. Everybody in the South does. Still had a Southern accent. I know you don't believe it now. Are you hearing me now?
You sound like you're Joey from the Bronx. Yeah, all right.
Yeah, I sound like that kid who got me into the exchange. But I was calling North Carolina businesses, and they're telling me to sell them Global Crossing convertible preferreds or Sun Microsystem stock or the AOL Time Warner merger. And I'm like, what the hell? I can't do this. So what I did is I found these closed-end funds that were municipals for North Carolinians, and I called every North Carolinian and sold them that. And I got my 50 accounts, and I did everything I was supposed to do to get through the system. And then my senior broker looks at me and goes, you didn't help me at all. These guys aren't going to buy another thing from us. You sold them the right thing that they got to buy and hold. Right? So that's what I mean, but I learned what not to do.
Yeah. It's almost like there was a very binary outcome there. Either you did something good for you or you did something. Yeah. Makes sense.
That's been the biggest problem with finance for a long time. Actually, that's what I do love about ETFs. I know we're going to get there eventually, but it's that transparency. It's that client alignment. That's why I got there eventually.
Yeah. What's the craziest thing you saw? Like the Wolf of Wall Street, the Boiler Room, like all. What's the craziest thing you saw?
All right, so there was this one day.
No names. Yeah. No names.
There was this one day where we were close to the end of some of this, like the markets were crashing, and a couple brokers lost their job, and in protest, they ordered 1,000 White Castle burgers to the floor of the exchange. You didn't see it on TV because they did it in one of the back rooms. There used to be like 6 rooms. Now you only see one. There's really 2 left, but we all only see one. And they filled that room with that just to piss off Grasso, who was the head of the exchange at that time.
Really?
Yes. And then they had another trick.
That's not that crazy, though.
Well, no, here's where it gets crazy. So they brought in the burgers. The other thing is there's no way to get alcohol into the exchange legally. There was a firm down there, not a firm, a restaurant down there that did Red Bulls. This is before we had Red Bull as a energy drink or whatever.
Yeah.
A Red Bull back 20 years ago was a tomato soup that was half vodka. So he ordered like 200 or 300 of those as well and was handing them out. And so it did get crazy, right? There's like a mountain. They're like jumping into this mountain. Of,
people they're fucked up on the stock exchange floor and they have their stomachs full from White Castle.
Yes. There was all kinds of crazy things back there. There was 2 clerks that worked down there that sold pornography, like videos back when there wasn't really an internet.
Yeah.
Like, I'm sure there's tons of weird stuff.
You ready for this? So in 2010, I actually spent a little bit of time at the New York Stock Exchange doing an internship. And I didn't know this, but next door to the stock exchange, there's like a building attached to the actual stock exchange. And it's an office complex, right? Like executive center. And one of the buildings, one of the offices up there, I forget, it was like Hustler magazine or something. And that was like the talk of a bunch of the traders, et cetera, was they were always looking for excuses. How do they go up there? Because it was all filled with, porn and all this kind of stuff.
It's amazing what entertained people back then. And back then they had the Super Bowl pool there was $10,000 a box.
Really?
And one winner, $1 million. And I was 22 and I'm looking at all this going,
these dudes are rich as shit.
and most of them are blue collar and they're actually just working hard to get it. But I also watched them all disappear, right? When I was down there was 10,000 of them. And now I think there's like 500.
Oh, I would be surprised if there's that many. But yeah. They're still walking around.
The guy who gave me my first job down there is still down there. He's still a floor like governor or something like that.
Okay.
You see him on TV every day.
Yeah.
You just don't know it.
So the other thing that a lot of people don't know, and I forget the guy's name, and I wish I remembered, but there's one guy who has been the overseer of the Berkshire stock. And he's been doing it for like 20 years or whatever it's been. Like basically he's been the one guy. And in 2010, he was still down there and people would walk over and talk to him and stuff. And he said, look, there's the 2 share classes and he knew everything, but he was mid 70s or maybe even to his 80s then. And I remember asking him, I said, how long are you going to do this? And he goes, why would I stop?
Yeah. Yeah. I mean, if the human intervention is still good and it's really the guys and girls that still work down there, they matter from 9 a.m. to 10:30 and then again from 3:30 to 4:30. In the middle of the day, unless there's a disruption, that's why there's 500 instead of 10,000.
Yeah. So how do you go from learning everything not to do to Horizon? What was that like?
So Horizon was like eye-opening. It was such a different mentality, right? It was like they were managing their own money, plus they had this internet fund, even though they didn't believe in the internet, but they wanted to diversify. And it was all about how do we find things that everybody else is ignoring? Actually, that's why they're in crypto now. Like they're one of the few RIAs that actually do it. 4 or 5 years in, I went from being the 4th employee with a company that had $1 billion to like the 20th employee with $40 billion. We had $40 billion with 20 employees. It was amazing. In 2005, our biggest position was Newmont Mining, and we watched it go straight down, like falling off a cliff. But gold went straight up. And we realized it was because the access has changed, right? So GLD, the first ever fund that could give you liquid exposure to gold, was launched right at the end of 2004. And so all of our big clients, the Soroses and the Einhorns who wanted gold exposure, now weren't getting it through the miners. They were getting it directly through the commodity. And we realized, well, Murray and Peter and them realized, I was still pretty young, ETFs are threatening the business of 2 and 20. ETFs are threatening the business of 125 on a mutual fund. ETFs are threatening pretty much everything normal in the financial industry. ETFs 10, 15 years ago were scaring people more than crypto. So they said, how do we hedge this? And it was a boutique firm. So young guy gets the job of how do we hedge this? And it became, let's get into the index business. Let's become angel investors in some of the startups. We got very involved with Wisdom Tree, very involved with Emerging Global Advisors. We looked at a number of others. And we said, not only we want to invest in some of these, we like incubated them in our offices to learn that whole creation, redemption, all that sort of stuff. Fast forward to 2012, I said, it's time to do this on my own. And I started Toroso.
What's the biggest thing you took away from learning to working at Horizon?
Oh, stay with what you love, right? So I loved the research part of Horizon. I loved the trading part. I loved the making the deals. By year 12, I had become in charge of 20 or 30 people. And I had a person above me and then a company and then 20 below me and then the clients. And I became a manager of people, not a investment guy anymore. And 6 months of that was enough for me to say, guys, thank you so much, but I'm going to go start my own company. It was nice when they said, well, we'd like to invest in it. So you can't leave on better terms than that.
Yeah, absolutely. And so what was the general idea? You said, hey, I want to go do this on my own, but was it, I want to go invest in ETFs, I want to create ETFs? Like what was kind of that original idea that you had that really pushed you over the edge to leave?
So for all you entrepreneurs out there, your first idea sucks.
Your first 10 probably suck.
So our idea was nobody has ever looked at ETFs under the hood. They've all said, if it says it's small cap, it must be. And I'm going to buy the cheap small cap one. And we thought, what if we look and make a research firm around what's actually in an ETF, right? So for example, the Vanguard Small Cap ETF, ticker VB. If you go look at it, it's actually like 58% mid caps. So we thought telling people that they would give us money to manage. Guess what? They didn't. It became a really bad time. The other big ETF firms like F Squared and Good Harbor and Windhaven, they were hitting some hard times. So for the first 3 years, we completely floundered while we built a brand around research and content and technology to look at ETFs. We were impossible for us to get in assets to actually manage of portfolios of ETFs. I think we stayed at 30 million in AUM for the first 3 years. Miserable.
Yeah. And so as you're doing that, do you think, hey, we made a mistake and this doesn't work? Or do you think that we just got to kind of keep plugging along and then we'll get more assets? So like, what's the thought process that you're going through when it doesn't take off how you originally thought it would?
Yeah. You have to commit to things, right? You have to give them their real try, but you also can't walk into that definition of insanity for too long because then you end up bankrupt. So I would say we kept trying for 3 years, but we had this one little piece that was a different angle. We were doing some consulting work for Global X funds using the research and technology, and that helped grow some of the assets at Global X. So on that year 3, when we said, let's keep the research, let's keep the technology, but instead of monetizing it through trying to get SMA models, let's go out and use this to help other ETF issuers grow. And the very next day we had Direction as a client and then Robo Global as a client and then EMQQ as a client. Today we actually represent like 14 or 15 issuers. And it was just an epiphany point. Today we're 8 years old. Right?
Really? Today? 2 years?
We did a party on the New York Stock Exchange floor on February 5th, 8 years ago to launch the business.
Congratulations.
So
it's like happy birthday, basically.
Yeah, it's kind of a happy birthday.
I didn't know that.
I didn't realize it till Facebook told me this morning that this was a memory and it has the picture of the exchange and the date.
Damn, I would have got a birthday cake. So my ice cream cake is my favorite, though.
So first 3 years lost.
Yep.
Reposition, 2 years of getting to sustainability, and the last 2 or 3 of finding scale.
Okay, and so describe what the business does today, because you guys have kind of multiple components to it.
Sure. So we have we oversee about $2 billion in assets. We have a traditional wealth management platform, 5 or 6 advisors that use ETFs under our tutelage to help people invest. Then we have a traditional asset management platform where we're the sub-advisor of the active blockchain ETF, the active battery metals ETF, the active gig economy ETF. And we still manage some assets there that, that's about 600 million as well. And then the last piece is our title Etf Services. That's under our umbrella. Anybody who wants to launch an ETF, they come to us. We help them launch it. We help them grow it. We did 8 funds last year, including some really innovative things like helping Blue Cross Blue Shields equitize their cash in an ETF, and helping SoFi, the student loan lender, launch 4 ETFs, including the first free ones. And those 8 funds raised $620 million in the first year. So
that's crazy.
It was a great year.
So describe what exactly is an ETF, because I think a lot of people hear ETF, they've seen all the people on Twitter or CNBC, et cetera, talking about ETFs. Like, what the hell is an ETF?
Okay, so I'm going to quote one of my friends, Reggie Brown. I'm the ETF nerd. He gets called the ETF godfather. He's the one who kind of 26 years ago helped build all the pipes for the trading of it down on the American Stock Exchange and stuff. And his definition of an ETF is it's a mutual fund with benefits. And he says it very sultry.
Right? What does that mean?
So it really is just that simple. The ETF is created under the same laws and same regulations as a mutual fund. It really is the exact same structure. It is exempt from one rule. And that rule is that it prices once a day. So mutual fund, same thing as an ETF, but only prices once a day. ETF prices every second. Now, once you price every second, you get all these unintentional benefits. Okay. One unintentional benefit is you have to be able to create and redeem intraday, which means there's massive tax benefits. So
what are those benefits?
So an ETF through the creation and redemption process, as long as there's flows, may never generate a capital gain. Most of them haven't. So if you took the same strategy and had it in a mutual fund wrapper and an ETF wrapper, most likely you're going to get a superior return after taxes out of the ETF version.
Got it.
Right? It's just a distribution of taxes. So I love ETFs because I go back to the philosophy and religion. They're transparent, they're liquid, they're tax efficient, and they tend to be lower cost because they don't have all those embedded fees to pay the old brokers at First Union that I used to work with. So it really is simply an access point. It is a better technology. It really reminds me of the precursors to what blockchain and things like that are doing to finance now. It really decentralized a lot of the original investments.
And so give me some examples of the most popular ETFs, right? So they're exchange traded funds. They basically are these baskets, if you will, of underlying usually public securities or liquid assets. But what are some of the popular ones? Okay.
So this is a great question because I have an awesome resource for everybody and it's free. So we run this thing called the Etf Think-Tank. It's literally etfthinktank.com, and it has on a daily basis the answers to all those questions.
Oh, awesome.
And there's no ads. It's not a paid site. We just wanted, for the ETF nerds out there, an aggregation site, right? And on there, it'll tell you that as of today, there's 4.4 trillion in US dollars in ETFs.
4.4 trillion.
4.4 trillion.
Damn.
Okay. Average expense ratio, 19 basis points.
Expenses. Okay.
Okay. So that's pretty cheap, right? If you think about where it's going. The open to close ratio, this is one that I love. In the last 12 months, for every ETF that opened, for every 1.56 ETFs that open, one closed.
Got it. So net gain every year.
It has been, but it used to be for every 3 that opened, one closed. It's been consolidating. The industry is waking up and saying, we can't just have 6 ETFs for every little subcategory. I think of it as a good thing. Another one I love to quote, right now on average, ETFs own 7.5% of every US stock in terms of their market cap.
ETFs own 7.5% of all stocks based on the market cap.
Yep. When we started calculating that 8 years ago, it was 2.67.
Got it. So 3x essentially.
Over the last 7 years. For 26 years, ETFs assets have grown on average at 19.6%. So this is a private equity kind of growth.
Yeah.
Right?
Annualized.
Annualized.
How do I just invest in that? And that number keep going up.
Man, where were you? I did launch an ETF once to track that.
Okay.
And it was, everybody just came out. That's the Meta ETF. We had ticker TETF, right?
TETF.
Right?
Okay.
2 years of it out there, nobody bought it.
Why?
Because when it's all said and done, that 19 bips times 4.4 trillion only equals about 8 billion in revenue. So when people think of it, they know the ETF industry is growing, but they don't see an $8 billion industry as
huge.
Yeah. I mentioned to you earlier, the pet care industry generates 50 billion.
Yeah. So here's one of the questions I've got, right, is it seems to me like structuring the passive ETFs, right? So there's a whole bunch of them. Let's say just SPY is an easy one, right? So the S&P 500, I'm basically going to build that basket and I'm going to allow people access through an ETF structure to put capital in. They don't have to be accredited. So they can be unaccredited, accredited, QP, whatever they want to be. They can put very small amounts of capital in, and also they can redeem intraday, et cetera. So they can buy, sell, liquid market, the whole 9 yards. Once I create that, there's some blocking and tackling that goes into making sure that it still sticks to the index or the construction stays straight. But for the most part, it's marketing, right?
True.
Once you get it there, is that would it be fair to say like that's the difference between ETFs that are successful and unsuccessful is who's good at marketing what they've built, or are there other things that go into the success and failure of an ETF?
So there's one step before,
Okay.
and then everything else you said is 100% accurate.
Okay.
You got to get the product right. Like, I can't tell you how many people come to us and go, I've got this idea. It's very similar to something else that's out there, but I've got a better index.
Yep.
I'm sorry. Nobody cares about your index.
What, and explain exactly what that means.
They go, all right, there's let's say there's a widget ETF out there. Okay. It makes this widget and it's market cap weighted, right? And they're charging 20 basis points. I'll get people who come to me and say, hey, I want to do an ETF on that widget, but instead of market cap weighting it, I want to weight it by the revenue of this times the X of that.
Got it. Like a very nuanced technical component change.
And because I've got this better index, I want to charge 40 bips. Failure. There's no marketing that's going to make that work.
Yeah. All people look at is that you're buying the same widget and you're charging me double the fees.
Exactly. That might work 20 years from now, right? Because it's how it happened in the mutual fund industry. You had the simple funds, and then people came out with a more complicated version, and it built on it. Right now, 99% of ETF investors are looking at the exposure. They're not looking under the hood. I thought 8 years ago I could start getting them to look under the hood. I'm 8 years in, and maybe it's gone from 100% won't to now maybe 99 won't. So it takes a long time to get people to look past the name, the ticker, the expense ratio. You got the name, the ticker, the expense ratio right, then it's 100% marketing.
Got it. And so what are the areas that you've seen that are not the large ones, but they're new that have come out onto the market that you're like, bam, they nailed it? Like, are there certain sectors that you've seen that are really get you excited?
So last year, Defiance came out with a 5G fund. That was brilliant.
Okay, 5G, and how did they construct it? Like, what's in the underlying assets?
It's all the companies that are in, I mean, they're going to be in some of the other indexes as well, obviously, but it's the Qualcomms and all that are involved.
Verizon, AT&T, whatever.
Rolling it out. But they packaged it all in one nice, clean sector. They worked with a good indexer, not like some of these specialty thematic things. You don't really want to go to the old school indexers, right? Because they're going to market cap. You want somebody who's going to think and research. So he used a company called Blue Star Indexes, Steven Schoenfeld. The guy was one of the original portfolio managers at BlackRock 25 years ago. So he's been doing this forever. And they built an interesting index, but nobody cares until they actually buy it. And then the guy in charge of the firm just poured all the money into marketing it. Anybody who goes and Googles 5G tomorrow, you're going to be chased by this ETF everywhere else you go.
Yeah.
Right.
Is paid marketing and digital marketing a big part of the ETF world now?
100% yes.
Really? I would have thought that it was much more what I would call not dumb as in like it's stupid, but like dumb as in not intelligent, data-driven marketing. So like, how do I get on television? How do I write a blog? Like that type of stuff. Not so much like, I know that I spend $3 and I get a customer and that customer's worth, $27, and it's more like data-driven acquisition.
So when I was at Global X, we started right away into this space because actually my partner Guillermo Trias had invested in some of these digital marketing firms. Most asset managers won't even touch digital marketing.
Yep.
In the ETF space, it's different,
really?
Right? Because it is decentralized. There isn't an intermediary that we have to go through, right? Like, if the end client wants to buy it, they log into their account and buy it. Whereas with hedge funds, mutual funds, SMAs, they got to talk to some old boring person to help them get to the end investment. So at Global X, we did things like ticker targeting, right? So if we had a competitive fund to somebody else and they looked up on Yahoo Finance, that competitive fund, guess what? Our ad showed up. Right? Nobody had thought to do that in the finance world. When we started talking to the regulators about it and our compliance, they're like, you know how it is. Most hedge funds, they don't want to talk to the press.
Yeah.
With ETFs, you want the masses to know because you're 100% transparent.
Yeah, you're basically marketing to the masses, and therefore any way you can get to them, whether it's through kind of the broad base, let me go on television, let me write a blog, let me tweet, whatever, all the way down to how do I actually run a Facebook ad campaign to get you to convert.
Yeah. And it better be educational. If you just try and say, buy my thing, it doesn't work. right? Show me a growth story. Show me how you're capturing it. Show me, that I want this. Like when we originally launched the blockchain ETF, we were watching the Google AdWords for blockchain and knowing that there's this demand. People want to figure out how to get this, right? So, it was so much of a demand that the SEC was scared enough to not let us call it blockchain.
So tell me the story. Tell me the story of kind of what you guys, the thought process and how you guys created that original blockchain ETF.
Okay. So, this is another one of those, my partner is faster than I am at this stuff. So I had, for our SMA accounts, been buying some blockchain stocks, Grow, Hive. I had bought some GBTC, sold it every time it went up because I was scared to death of the premium. And he kept saying, why don't we do an ETF of this? Why don't we do an ETF of this? And I kept saying, there's not enough companies. I can't make an index. And all of a sudden there was this epiphany. A friend of ours called us and said, I've built an index, but it's not really investable. And he said, but I'm working with this other firm. They want to do it, but they need somebody to make it investable. And all of a sudden we said, all right, the three of us are going to do it together and we're going to do it active. And that was the epiphany was, 3 years ago when we first started this, you couldn't really do a passive version of this and get anything that's a real blockchain company. It was the fastest we've ever moved in our lives. We went from agreeing to do it to filing in 11 days.
Wow.
That's, especially with three partners, that doesn't happen fast. But we all saw it and we all trusted each other and it's been great.
And so it's important to call out here the difference between these passive and active ETFs. What is that?
Okay. So I talked about mutual funds with benefits earlier. So the first benefit has always been the low cost that people point to. And over the last 3 or 4 years, people realized, hey, it doesn't have to be passive to be low cost. And it doesn't have to be passive to be an ETF. And I will say the pioneer here is Catherine Wood and ARK. What she did to bring active management into the world of ETFs is brilliant because not only did she make it viable by being good at what she does, she did something even more important. It goes back to your marketing points. With a mutual fund, you only know what you own like 35 or 45 days later. So you're not allowed to talk about what you own. With an ETF, you tell what you own every 15 seconds. So rather than find that as a challenge, Catherine embraced it and said, since everybody knows what I own every 15 seconds, I'm going to talk about it. Right? So she took what most active managers would see as a negative, embraced it and ran with it. So today we have plenty of active ETFs. In fact, active ETFs represent about 3% of the assets in ETFs today, but represent 6% of the revenue.
Really?
Yeah. So you can see why people might be attracted.
Yeah, absolutely. And Kathy has been on the podcast before, and I think part of what has made her so successful is not only one, her investments and kind of the conviction she has, but in the marketing, but also on top of that, she really embraces the idea that anyone can quote unquote participate by kind of open sourcing and allowing participation in her research meetings, et cetera. And it's just a very different way to think about asset management than kind of traditionally has been done.
100%. Like, I've never understood these people who say, I need to have a lack of transparency in order to have alpha. Well, then you don't really have alpha. So I love that she's saying, I'm going to bet on innovation and my team, and I'm going to tell everybody what I'm doing because I got no secrets. She has embodied the values of the ETF structure.
Yep.
It's amazing. It wasn't easy, but I'm very happy for her.
Yeah, absolutely. And so as you look at the passive versus active, you guys decided to go with the active model for the blockchain ETF. What was going into that actual ETF? Like when people think of blockchain companies, most of them are private, not public.
Absolutely. And that was really hard in the beginning. It's why, my partner Guillermo kept saying, build it. And I kept saying, it's not ready. And then the epiphany of going active was, if I'm active, I can buy IPOs 30 days later. If I'm active, I can buy $100 million market caps. So for example, last year, there was 3 or 4 IPOs that I would call very close to pure plays in the blockchain space.
Which were?
My absolute favorite right now is Silvergate. Probably half the people listening to you have banked with them because
Alan Lane's been on.
Yeah. Like they are the bank. right? They went public in December, right? It trades at a discount to what normal banks do. At some point when the big banks want to really get in, they're either going to have to build it or they just buy Silvergate. Like that's a great one. Canon, ASICs chips maker, like pure play miner and chip maker.
Yep.
One Connect Financial. These are some that, came out last year, but we've also got things like Hut 8 and Hive, Galaxy Digital, Novogratz's company. I mean, it's a merchant banking company. They're stakes in Ethos and stakes in Hut 8, stakes in all of it. GMO Internet. I mean, they're just cranking away. A lot of what we own at the top are these large Japanese firms like GMO and Z Holdings and Digital Garage that primarily are doing stable coins and getting into the decentralized finance, or they're building exchanges. So I think the original negatives that everybody talked about, these are just chips companies, or these are just big FANG names. Not so much anymore, right? If I look through my top 10, there's maybe 2 names that the average investor would recognize.
For sure. What is, as you look out at the space, what are the things that are coming down the pipe that are in the private markets that you're saying, hey, when this gets into public market investors' hands, or they can get exposure whether through ETFs or otherwise, you're like, that's going to be a really big moment?
So in terms of the public companies, I think it's going to be the spinoffs.
Okay, explain.
So right now you have awesome things that are 10, 20, 30% of big companies' revenue. And standalone, they're a pure play blockchain company, right? So I think we're going to see spinoffs of JP Morgan, that's their blockchain business, or IBM, that's their blockchain business, or Bakkt being spun out of ICE, right? Like, I think that's the play because a lot of the private stuff is partially owned by SBI Holdings or SoftBank or Digital Garage, or Accenture has an arm here, and Citigroup's invested here, JP Morgan. They all have taken these little stakes. MasterCard's gone all in. I think that for the public markets, that's the net. Now, the other end of it, whenever we talk ETFs, everybody wants to know about the Bitcoin ETF, right? I think that's what everybody's waiting for. Ironically, we don't see that as a threat to what we built. The blockchain ETF block is a hedge against crypto as alone.
Okay, explain this. First, as why do you feel like block is not threatened by a Bitcoin ETF?
Because block is the technology. It's the companies making money off of it. If there is a Bitcoin or cryptocurrency ETF someday, block will become like GDX. So GDX is the gold miner ETF, and GLD is the gold ETF. So people who want to own the protocol will buy the Bitcoin ETF, and people who want to buy the picks, axes, and utilization of the protocol will buy the blockchain ETF.
Got it. And as you think about the Bitcoin ETF, like, what's your analysis of kind of where we are today? I know we're investors in Bitwise. Obviously, they've got one of the applications in, and a mutual friend of mine and yours is Hunter.
Yep.
Kind of what is the thought process there as to how that plays out?
So I've been a little controversial on this. If there was a crypto ETF, I would buy it. I would buy it for my clients. I think it would be great.
Why is that controversial?
Well, here's where it gets controversial. The part is, I don't think it's good for crypto.
Okay, explain that.
So crypto's part of the original mission is to get rid of the trusted third party, right? Like that is part of why we want a decentralized network. That said, we have this whole group of investors that are waiting to get in until the trusted third party of an ETF and the SEC says it's okay, right? So the reality is it's a contradiction, right? The SEC is saying when these markets are clean and we can follow them and all that sort of stuff, then we'll let you put it in an ETF. Okay.
All right. So let me give you a scenario. There's a couple people who have said this to me. I'm not saying that you're wrong, but let's take cash, for example, US dollars. I can own that in a decentralized, self-sovereign way. I can have physical cash, right? I got money right here in my pocket, or I can take these same dollars and I can put them into an electronic version in a bank via a centralized third party, right?
Yep.
And I can get exposure through multiple ways to the same asset. But it's my choice, right? I could take every dollar that I own and I could put it all into physical cash and hide it underneath my bed, or I can go use centralized third parties. If I could only have it in one format, either or, right, it would drastically limit the access.
Sure.
Bitcoin, in my opinion, is similar in that I can own Bitcoin directly, right? And I can self-custody it and kind of do all the things that is kind of that Bitcoin ethos that you're talking about, which without a doubt is super important and should be encouraged. But there is some percentage of the population, I don't care how much education you do, they'll never do it, right? And so when you add in a Bitcoin ETF, all of a sudden you're just giving another way to access. So it's not so much that I disagree with you, it's I don't know if it's going to be as big of a moment as people want it to be, right? Because there's still the people who own Bitcoin today aren't then going to just go buy Bitcoin ETF.
No,
right?
Why am I going to go pay for it when I've already got it?
Yeah, when I already have it. Exactly. So that's one. And then two is you're actually just going to bring in the people who probably weren't going to go buy it directly. Like I keep going back to anyone who knows about Bitcoin and has made the decision to invest went and bought it. Right.
I agree.
They're not waiting around for the ETF, in my opinion. Right. Maybe there's some people who are like, we haven't made the decision yet, but if an ETF got approved, then we would do it. But if people have decided to invest, yeah, it's difficult to go to Coinbase or to go to Gemini or go to, BlockFi or whoever, but it's not that difficult.
No, it's not. The reality is the reason most people want it is so that advisors can charge fees on it.
Of course.
Yeah.
It helps the advisors.
Yeah. So to me, it's like they're signing their own death warrant, right? So I get the question, and this is kind of connected. What is the biggest threat to ETFs? It's the blockchain, right? Like once every security is tokenized, why would you need an ETF? Why would you need half the 500 people left on the stock exchange, right? And that's why people like NYSE are investing in Bakkt and things like that. So it's the same contradiction, but it's important to talk about it because if the average person is going to buy the Bitcoin ETF or the crypto ETF as a speculation, they need to know that the reason it has value is because it's going to replace that whole system, right? Like it is going to replace the ETF if it works. And that's when it's going to be worth an insane amount of money.
Yeah. What do you feel like right now is the general sentiment of folks that are buying ETFs? Are they saying, I can't wait for the Bitcoin ETF? Or is that something that's more like the crypto community is waiting for and they think it's a big deal, but people outside of crypto could care less?
It will likely cause the price to go up because there will be a massive demand.
You do think that there's an
I think it's $1 billion fund within 3 months. I think there is a lot of demand, right? Because look.
What do you think the fee looks like on that?
A reasonable one or what is likely to come? I think somebody could probably charge close to 1% because there's going to be storage costs.
You think that 1%, so 100 basis points, whereas the traditional fee structure right now is on average around 19 or 20 basis points.
But that's asset weighted, right? So if I look at like the robotics ETF that's done extremely well, that's at 95 bips.
Okay, so there are ones that have high in air quotes.
But when you have, SPY at 200 or 300 billion at 7 bips, or 9.45 bips. I love how now they're rounding the half bips so that it's almost 10, but it really gets quoted as 9. It's very smart what they do nowadays. But when you have $250 billion at 9 bips, that takes the whole average down. But there are plenty, like ARK, I think, is at 70 bips. Nobody has any problem with that. Or maybe 75. Our blockchain ETF is at 70 bips. Nobody's complaining there. We're doing a lot of active research. We got to sit down with Novogratz and Overstock and the Japanese companies, Digital Garage, meet all the IRs, figure out if Riot's a real company or not. Like, we're being paid for doing the research.
Absolutely. And so when you look at that, Bitcoin ETF gets approved, $1 billion fund in a couple of months. You're driving, $1 billion. That's probably a $10 million revenue business, give or take, for somebody. But
if it keeps going up.
Okay, so that's my thing. Is like what does it grow into though? Right? You're talking about $250 billion in the ETF world today. Like how big could something like that get?
A Bitcoin ETF. So the problem is there's two variables here, right? So there's the variable of probably raises $1 billion in 3-4 months. And then you get the price run up, right? That's part of why the SEC is being so careful.
Yep. You're saying $1 billion of capital inflow into the ETF. They then obviously have to go buy Bitcoin.
Yep.
All of a sudden you get $1 billion flowing into the asset. It's only $170 billion asset today. There's price movement. Now you see the price moving. Then people start chasing, right? You can see very quickly how here we go into this parabolic run. But at the same time, the SEC wants to protect people from getting caught up in that mania.
100% yes. Yeah. They saw the Long Island blockchain or Long Island ET with T, was it?
Long Island Iced Tea.
Long Island Iced Tea blockchain thing. So like
they changed their name to blockchain like overnight. And literally the stock just exploded. And that was like 2 weeks before we launched our blockchain ETF, right? And 2 days before we launched, they called us and said, you can't use the word blockchain in the name. Really?
Yes. Because they saw the mania that was happening.
Yep.
Now for us, honestly, it was one of the best things that could happen. There's an irony here because we had a great ticker, BLOK. Everybody knew what it was.
What is it actually called?
The Amplified Transformational Data Sharing ETF.
Jesus Christ.
Yeah.
The Amplified Data Sharing.
Amplify Transformational Data Sharing ETF. Okay. I don't think I've said that in 2.5 years.
Yeah. AKA blockchain.
I mean, but I understand that the regulators are there to protect the public, right? And they did. But anybody who went and looked at what we owned, they knew what we owned. We showed our holdings.
Yep.
But at that time they were protecting. So when they look at this stuff, they're always looking to protect because there's no upside in it for them, right? What is the upside for them to bring in this new technology, right? They've got enough to regulate.
Yeah.
So it has to actually prove itself out. And here's the irony back to the statement earlier. I think once it proves itself out, I don't think people will need the ETF anymore.
I agree.
I
agree. We'll see.
We'll see.
When do you think it gets approved? Does the ETF get approved while Jay Clayton's in office?
I don't know.
That's a cop-out answer.
No, but I'm gonna give a little more. Right. I would have bet this year. Because
this year meaning 2019 or 2020?
2020.
Okay, 2020. We're recording this February 2020.
Yep. So I would have bet February 2020 because we've seen the interval funds get approved and I see trading in markets starting to understand it. But then as I talk to a lot of the regulators directly on other things, they don't seem to see a reason to get here. I always thought that the first product was going to be futures based. And then you had, CBOE futures kind of fail. So like, I don't, they wouldn't do the VIX products until the futures were trading well. They're not going to do this. So all the things that I thought were going to get it there aren't. Here's the wild card. We got our halving coming. We don't know what's going to happen. I love your warnings on Twitter all the time. Got to be careful and got to do your own research. I agree with it, but
listen, because here's why. You ready? Because people accuse me all the time of never saying negative things or never saying the warnings. And so I say, you know what? Fine. Everyone, if that's your biggest knock against me, I'm going to periodically tweet. You know what? I'm going to tweet it out while we're on recording this podcast right now. Is that I'm going to periodically tweet out saying, don't invest all your money, do your own research, all the things that people want to be, that people don't want to hear, but need to be told.
Absolutely. Right? I mean, you have to know what you own. Like that's what I love about this whole ETF thing. It shows you what you own. There's no secrets. And, I don't want to be the bull here and say, oh, the crypto winter is coming to an end and the halving's coming. But that's the wild card.
You don't think it's over?
I am. Well, I'm so on the record here that I'm afraid to say how bullish I am.
Wait. Well, all right. Well, tell us some of why you're bullish.
I see the actual companies involved actually using the technology, not for bullshit anymore, right? So
I agree.
When I first started doing the actual company research, I'd go there, I'd talk to the IR department, and blockchain was like ESG to them.
Yeah.
It was like, oh,
they have to talk about it. We need our blockchain strategy so that we can get some headlines and everyone pays attention.
Yeah. And so I was like, how do I buy this? There's a little bit here. I got to see it. And now when I talked the second time I going back to talk to them, it was, we've got a utility token. And then the utility token era drove me insane. And that was basically when everything was crashing, right? Utility token this, utility token that. And then in the last, call it 18 months, I've watched so much happen with security token and actual finance things and actual transactions happening. And I mean, even Overstock, despite all the headaches that come with that, what they did with the token dividend forced certain parts of the financial system who've never thought about this to think about it. And we traded through it. Like, it was not easy. So I am bullish because although I don't see the full killer app yet, other than the cross-border, I see it coming because there are actual real projects now. It's not just, hey, we said it at our IR meeting so that we got some SEO and SEM on it,
For sure. What's the worst part of the ETF industry? There's a lot of good things. There's a lot of things that obviously are great for investors. They're great for the asset managers. What do you think is like the dark side of the ETF industry?
Oh, man, I'm going to piss people off if I go here.
Yeah, that's fine. I piss people off every day. I'll take the blame. Yeah. I'm just channeling what I'm thinking to him, so he's only going to repeat what I say.
No, I'll just tell the truth because philosophy, religion, transparency, we're all there. It's gatekeepers, man. It's when this started, the ETFs could be bought anywhere. It was decentralized. It was just like a stock. Over the years, the bigger firms, and it's every one of them, have figured out how to put up gates to prevent investors that are acting or using them as an intermediary from accessing new innovative ideas. And then they're asking the older firms that they already have relationships with to clone those ideas.
So give me an example of what like a gate would look like.
A gate would look like Bank XYZ says, you can't buy this ETF because it's from a new issuer who we haven't approved.
Oh, got it. Yeah.
But if you really want it, we'll call this issuer that we already have business with and ask them to create a clone of it.
Got it.
Right.
And
that
so
stifles innovation.
Basically, they take the idea, they hand it to the big asset manager. The big asset managers, you're not going to get fired with going with IBM type model.
Exactly.
I'll cover my ass. You as the investor, you're going to get the same exposure. The big asset manager loves us because we're bringing them capital. We cover our ass. You're not going to fire us. But the person who gets screwed is that person with the innovative idea who's creating the small ETF.
100%.
Yeah.
And you got to understand, ETFs are taking a massive business model away from these big banks, right? They make a ton of money on these mutual funds, and that fee's not book banked into an ETF. So they deserve the right to figure out a due diligence, figure out this or that. But I don't like that it comes at the cost of innovation, right? Like, to me, that I always say there's two things pushing the growth of ETFs. We talked a lot about client alignment factors. Right? I said tax efficiency, transparency, liquidity, low cost, all that. The other one is innovation growth factors. Okay. ETFs made gold accessible. ETFs made leverage accessible. ETFs have made buy rights accessible. ETFs have made robotics and blockchain accessible. ETFs will probably eventually make crypto accessible. You start stifling that innovation, and then we're just back to the making 800 dials a day. Hung up on.
It's pretty crazy.
Yep.
Right. What else do you think about the blockchain crypto space? Like, what are you excited about outside of ETFs?
Okay, so my favorite thing about blockchain is it takes the values that I've talked about in ETFs to the next level. And I love how the next generation is going to embrace this. So I have 3 children. They're now 8, 10, and 12. And each one of them got a Bitcoin 2 or 3 years ago at like $850. So that means every day they look at it. They know the price, right? And to me, that tells me this is really going to work because they're watching all the YouTube videos. They're understanding it. My 8-year-old, he was 7 at the time, but he has a Raspberry Pi. He went and built a Bitcoin miner after watching a YouTube video. It didn't work. He really didn't know what he was doing, but he plugged a bunch of wires together and put it there. And I was so proud of him. I know.
Show it to him.
Yeah, the listeners can't see it, but for the YouTubes, I bought this for $7 online.
It's a gold coin that has the Bitcoin B on it.
Yeah. It's basically a piece of metal. It's worth $7. But I stuck it on his Raspberry Pi. And when he came home from school, he's like, oh my God, it worked. You know? But because of that, I think I'm going to buy him a coin mine for his birthday.
Oh, let's go.
Yeah.
So what's interesting though is the kids, they don't question whether this is a thing.
Nope.
They're like, of course it's a thing.
Of course. Like they don't watch TV.
Yeah.
Right? They watch their screens and they don't have the same misconceptions that we have. They're not walking in with this idea that the government has to tell me it's worth something.
So every time I talk to one friend, he has 2 kids. They're around, I don't know, 10, 11, and then probably 13, 14. So kind of between the ages of 10 and 15. I wish I could say who it is, but a good friend of mine. And he says that his kids are the ones who convince him to buy more Bitcoin. They don't actually say like, hey, Dad, go buy more Bitcoin. But the way that they talk about it, he's like, this is absolute. Like, I'm so fucking bullish because like my kids don't question it.
Yeah.
Right. And it's interesting to see, kids, when they see technology, one, they're better at using it. Like, you ever seen like a 6-year-old using an iPhone? They know everything.
My son sets up like iPhone stores in the basement of all our old broken ones. And he knows, like, he'll list out the iPhone 11 does this and that. I have no idea what you're talking about, but
crazy.
Yeah.
And but they understand what's going to work and what's not, right? Which is pretty cool.
And they don't care about, who is Satoshi Nakamoto or all the BS we deal with trying to explain to somebody who's, 80 years old.
Do they buy things in video games?
Yeah. So Fortnite bucks, the V-Bucks. Oh my God, I hate V-Bucks. But like, because it's like he gets a Christmas present and all he wants to do is buy V-Bucks. Mm-hmm. But I get it that he's acclimated now. Yep. I know like my friends over at Galaxy Digital, they keep telling me, look at the cryptos that are working in gaming.
Yeah,
because those are going to be very powerful.
I know Mike is real bullish on.
Yeah,
I think.
Yeah, Yoshi keeps talking about it too.
Yoshi, man, shout out to Yoshi.
He's been very helpful with us with blocks. So I appreciate it. The kids get it though, and they don't slow down, and that tells me it's going to get there. Actually, we did have a story to talk about that I promised I'd tell you today.
All right, let's hear.
And it kind of links in here. So I mentioned the kids don't care who created it.
Yep.
And I love, and I always explain that the fact that we don't really know who created it is awesome. But this is one of those scenarios that people don't, a lot of history buffs might know, but this is his history not repeating but rhyming. There's this story of Nicolas Bourbaki.
Okay.
Nicolas Bourbaki was a Napoleonic general who lost like multiple wars or multiple battles. I guess he didn't lose the full war. And he got exiled to some island, tried to kill himself. Failed at that. Like he was like known as the failure, right? That was, a couple hundred years ago in France, that was the name. The elements of algebra, all the volumes that create the original text for how algebra works, written in France, are all authored by Nicolas Bourbaki.
Really?
No, it's the same as Satoshi. It's a group of people who didn't want to have credit for it.
Really?
Yes.
I did not know that.
Yeah. So modern algebra is written by a group of mathematicians in France, and they claim the author is Nicolas Bourbaki all the way through.
Because they didn't want to be identified.
Because they wanted people to adopt it and not question the authors. Not be like, oh, this guy has this opinion because he's trying to sell that paper or this or that.
Yeah.
That was a poor French accent. He the paper. I just got back from France. They're a little bit rude. I must say that the stereotype is true.
Depends where you go.
Yeah. Paris.
No, but that idea is really interesting because when you look at the removal of the creator, it does drastically increase the likelihood that people will adopt something.
I love it. It's like give the ego away.
Yeah, Marty Bent calls it the Immaculate Conception.
Beautiful,
right? Which is little fiat is religion, and so is any money.
Yeah,
and so
you have to have a belief system somewhere. I mean,
for sure.
Yeah.
Where can people find you on the internet?
So there's at Michael _Venuto on Twitter. I'm pretty active there. ETF Think-Tank.com is probably the best place to get our unbiased content, right? And then we have plenty of other websites where we're doing and selling stuff, but I'd rather you find me where we're educating, right? Where we're acting as a Bourbaki or a Nakamoto.
I love it. I love it. Before I finish up, rapid fire, what's the most important company in crypto?
Most important company in crypto? In terms of public, like what we're dealing with?
Whatever, public, private.
I mean, I guess from an adoption standpoint right now, even though it's not the core, I think it's Fidelity or Backed, like from getting to people understanding this and actually using it in the finance world.
Mm-hmm. You think they're huge?
Custody.
Yeah.
That's the big thing.
What's your most controversial thought in crypto?
That a Bitcoin ETF is a contradiction to the overall concept.
So that's controversial for everyone except for the hardcore Bitcoiners.
Exactly.
Right.
I guess my price targets, maybe outside of the crypto world, whenever people say, well, why do you have Bitcoin? I go, one, I believe in it. Two, it's bug out money. Right.
Chaos hedge.
Yeah. I do believe if I've got to go to Europe, if I got to go to Latin America, I want to know I got $100,000. That's probably going to be worth way more than that in that scenario.
Mm-hmm.
Yeah.
What's the one law or regulation that you would change or improve in finance?
So there's a lot of ridiculous ones out there. I think probably the biggest ones have to do with taxes. Right. I think that the tax code as it applies to investment should be changed to promote good investor behavior. People who trade in and out should be punished, right, from the tax code, and people who buy and hold and do it as an investment should be rewarded. The ETF does some of that, but there's plenty of other parts of finance that are left out.
Yeah, it's kind of like on a 10,000 foot view, they've done it correctly, but when you get into the details, that's where it gets
it gets messy quick.
Yeah, absolutely.
Yeah. I could list 100 other little ones, but they don't matter. Yeah. To the average investor, taxes eat away. Taxes are fees.
What's the most important book you've ever read?
So I always like to give two here because I have my fiction one and my investment one. Fiction, City of Glass. So we mentioned North Carolina earlier. Mm-hmm. City of Glass helped bring me back to New York. Mm-hmm. It's Paul Auster's book. It's part of the New York trilogy. If you haven't read it, it's worth reading, especially if you love how New York City works. But it also handles language and
City of Glass.
City of Glass by Paul Auster.
Okay. And then what about the investing book?
I have to go with a classic because he's been somewhat of a mentor to me, is Random Walk Down Wall Street. Mm-hmm. Burton Malkiel's helped us with our business over the years. And there's two things I love about it. He lays out the math case for buying and holding. And then at the end of the book and in edition number 10, 11, 12, he starts talking about where there's inefficiencies and how to do it. So he's not an ideologue. I hate people who come out and say, this is the only way to do something. Mm-hmm. I love that he's laid out why indexation works and why it's a base. And then he's laid out why active works where there's inefficiencies.
Makes complete sense. Aliens? Believer?
Probably.
Why?
I'm a believer that there's extended life.
Why?
Like, I just don't see how there isn't, right? Like it's
just the world's like the galaxy is too big.
Yeah. I mean, I don't know. I don't want to get too weird, but
no, we get super fucking weird.
All right.
Here.
This can't be the only dimension. I've met plenty of people that probably have a zipper on the back of their neck. You
think that it's a simulation?
No.
No simulation.
I don't feel the simulation. I feel there's multiple parallels. There's too much space for us to be the only consciousness.
Yeah.
And I think we have too much hubris to think that out of all the living beings that we could see on this planet, that we're the only ones that are actually woke.
Yeah.
I think that's...
It's crazy when you start thinking about like, we don't need to go off the planet to find the other life.
Absolutely.
Yeah. I saw recently another video on Twitter of this fucking thing in the ocean. I don't even know what it was, but I'm telling you, that shit ain't nothing that we learned about in school.
Yeah. Well,
because it was moving in all weird directions. It was changing colors. It was doing all kinds of crazy stuff.
So we've talked about some of my weird stuff with chess and debate and ETFs and crypto and wokeness. The other thing I love to do is fish. I do that with my kids. We're on the sea all the time. I've been 100 miles out to sea overnight for 3 or 4 days. You see weird stuff.
Really?
Like, yeah.
Like, what's the weirdest thing you see?
I mean, I've seen swordfish come up with like a squid chasing them. And it's supposed to be the other way around. And there's lights. Like, there's no light out there, but you see it coming up from the depths with lights. I saw
Where's the light coming from?
The fish.
Oh,
they're bioluminescent. The squids have bioluminescence. And then I saw this one time, a lobster pot I pulled up on 80 miles off the coast of New York. And there's a fin on it. And I don't, what is this? And I pull up and it's a shark that was like 8 feet long that bit the rope and got his teeth stuck in it. I spent a half hour getting this shark's teeth off like, you see crazy things.
Yeah, it's just nature.
Yeah, and I could have just kept going.
Yeah.
But I wanted to save that shark.
Do you have Instagram?
No. My kids do, and they keep telling me about it.
All right, don't tell them what I'm about to tell you because you don't want them watching this. But if you just go on, your browser, go to www.instagram.com/natureismetal, METAL. It's just absolute savagery in nature. It's just complete violence of animals eating each other, tracking each other, just shit that you would look at and be like, it is a daily reminder of how humans are just soft, right? If you think of us as an animal compared to the wild, the things that go on in nature, most humans don't want to see.
I hear you. I think my kids have shown me some of those videos. I mean, I was in Florida at the ETF conference at like 9 a.m. I just get a picture of a giant tuna from my son, and he's like, "Look at the size of this fish!" Like, they just get excited.
Yeah, they just love it.
Yeah,
that's awesome. What question you got for me to end this thing?
Oh, question for you. You know what? I've heard so many of your pods, so I kind of know the answers to a lot of them.
Whatever you got.
I got it. What question have you not been asked that you've always wanted to be?
I don't know.
How's that for a turnaround? There's that debate skill.
Yeah, the question that I haven't been asked. I'm more surprised that people don't ask about my motivations for certain things, or they don't ask. Everyone wants to ask like the easy, soft questions.
Yeah.
No one really asks like super hard questions. The people who have, so like I'll give a shout out to Matt Odell. Matt Odell came in and he had very specific questions. He was like, why are you doing this? Why are you doing that and stuff? So like he definitely gets credit there. And then Meltem, the first time that we did the interview, Meltem Demores came in and she pushed back on some stuff, etc. And like what people don't realize is like I kind of enjoy that more. It's just like people come in and ask like kind of like softball questions, like, well, what do you think is going to happen with Bitcoin? Like, okay, everyone's kind of already heard that, right?
Yeah, I listened to your AMA on the train ride in today. So like, I know the YouTube. So I was like, I can't think of a question, but it's interesting to hear how you just described that.
Yeah.
Because I think that's why you've been successful with this, is because it's genuine.
Of course.
Right? Like if people were sitting here going, Pomp is selling something.
Yeah. So like here's what I tell people behind closed doors. I have no problem saying this out loud. This is the most selfish thing I do. And everyone thinks about it as that's so nice. He creates so much content. No, fuck no. I'm learning every single conversation I have, and I'm writing every morning. It forces me to put my thoughts. I'm tweeting. I'm seeing the way people interact with it. Like I'm getting all of these inputs and signals and feedback and critiques, and it helps me accelerate what I think and kind of have a more thorough thesis. And so like it's selfish in that standpoint. If I wasn't learning anything in these conversations, I wouldn't have another conversation. Like I'd just see ya. But the fact that I then record them and I post them and people find value, great. Like that's a second order effect. But this is the most selfish thing I do by far.
Okay, so when they want to edit this, you just go back and say, Mike's going to ask the question, why do you do these pods? No, let's leave it all in.
No, we don't do any
editing.
to
an awesome answer.
Joe's in the Jeopardy corner. We might do a behind the scenes video to post on YouTube because Joe's got his little studio set up. We got the Mevo camera. We've got lights. We
got him laughing.
Think about this. It took 220 something episodes before we got a fucking light in the room, right? But we got a light in the room now. We are ready to rock and roll.
Next time I want makeup.
Yeah, there will never be any makeup. But the next thing I got to do is we got to get the some art for the wall,
or some of the foam stuff for the echo.
No, I don't care about the echo. People don't like.
Well, we're up on here. I don't think there's much echo, but I think we played Jeopardy on that question.
Yeah, exactly.
You gave the answer. I gave the question afterwards.
That's fine. All right, man. Listen, I appreciate you coming in and doing this. You guys have done a ton of shit in the ETF world, so I appreciate you giving us a rundown there. People can go check out etfthinktank.com, check out the block ETF, and we'll have to do this again in the future.
This has been a blast.
Absolutely.
We'll reach around. Oh, there we go. Thank you.